Hey everyone, and welcome back to Money Journey. Today we are diving deep into Adobe, ticker symbol ADBE. You have probably seen the headlines, down 42% from its all-time high in 2021 and even down 10% year to date. With a forward PE of just 17, Adobe has never looked this cheap. Is this a golden opportunity to buy a top tier company at a discount? That's what we are here to find out. In this video, we are not just looking at the stock price. We are breaking down Adobe's core business, its powerful competitive advantage, and most importantly, its fundamentals and valuation. We'll explore if this company is truly undervalued and if it represents a solid long-term investment opportunity. If you are looking to find those hidden gems in the market, understand company fundamentals, and make informed investment decisions, you are in the right place. Let's get started. Adobe is a giant in the creative software space with its Creative Cloud suite, Photoshop, Illustrator, Premiere Pro, practically industry standards. Their subscription model creates recurring revenue, a huge advantage in today's market. And let's not forget their dominance in digital documents with Adobe Acrobat and Sign. What sets Adobe apart? Its competitive moat is massive, with a near monopoly in creative tools, a subscription-based model locking in recurring revenue, and a sticky ecosystem. Once users are in, they rarely leave. Plus, Adobe is pushing hard into AI with tools like Firefly, keeping it ahead of the curve in a fast evolving tech landscape. Their competitive advantage are rooted in strong brand recognition, a wide ecosystem of products that work seamlessly together, and high switching costs. Once professionals learn Adobe software, they rarely switch to alternatives. This creates a powerful network effect that's hard to replicate. In terms of fundamentals, Adobe is incredible. Trading just at the forward P of 17, this is a high quality company, one of the best in the market, and right now it looks very attractive. They trade at a P of 26, forward P of 17, but if you look to price to free cash flow, that's what matters. It's 18.7, which is very low for a company like Adobe. When you look to margins and growth, they've been growing around 40% the revenue year over year, gross margins of 88%. 2024 they had gross margin of 89%. That's absurd. That's really high margin, one of the higher in the business. Net margin of 30%, but free cash flow margins are even higher. In 2022 they have 42% free cash flow margins. In 2021 43.6%, but 2024 they have free cash flow margin of 36.6, which is incredible high margin business. In terms of balance sheet, they have around $7.4 billion in cash and short-term investment. Their long-term debt is lower than that, on 6.2 billion. So they are net positive in their debt, which is incredible. The returns are very great. Return on equity around 47%. Return on invested capital last year 34%, but the 5-year average is 26%, which is really high. When you look to our Money Journey checklist, it's all check marked, one of the highest score, 96 out of 100. The revenue growth, check, growing around 14% the revenues. High gross margins, 88%. Net margins above 30%. Free cash flow margin of 36%. That's absurd, really great. Low debt, they are positive in the when you compare the cash in hand with their long-term debt, which is very great. Returns on equity and uninvested capital really high, above 30%. That's something we really love to see. In terms of the moat, we already talked about their competitive advantage. For me, the biggest moat, it's not their assets or intangible asset, it's switching cost. It's very hard for companies we use that have experts on Premiere, Photoshop, change it to another program, even though they face plenty of competition for companies like Canva, for example. It's very hard for companies to change to other software. Learn People learn other software tools, for example. So it's a waste of time, which means waste of money for other companies. So they prefer to pay more for Adobe's product. Now they face other problems like AI. That could be a problem in the future. That's probably what investors look into the biggest risk into Adobe's business, and it may be true, but we don't know the future. So, but for me, it's a wide moat. They've been free cash flow positive, very good margins, very good balance sheet, and they are returning capital to the shareholders. They are increasing their buybacks. They are buying back around 2% of the company each year. Right now, valuation looks cheap. Never been so low in terms of forward P, for example, and they're increasing their buyback. That's a sign of confidence from the management. So that's good fundamentals from Adobe. But is Adobe really cheap considering the risks? Let's do our reverse discounted cash flow analysis. So US company, for me, that's a low risk. Their balance sheet is incredible. There is no insolvency risk for me. But for me, the discount rate minimum for me to invest in this company should be around 12%. I will not invest in Adobe if I think that I can earn less than that. So minimum 12%, that's already some margin of safety added. So for my base case, I do really believe Adobe can have 40% free cash flow margins. They have above that in some years. Right now, their profitability is increasing. They're expecting to continue to grow around 9% in 2025 and have free cash flow margin around 28 to 40%. That's what analysts are expecting. So they are expecting to grow 9% in 2025, 10% next year. So I'm expecting them to grow around 10% in the next 5 years, 7% in the 5th to the 10th year. In terms of P, this company deserves a premium, one of the highest margins on the business, good growth, one of the best products in this cloud segment, editing software. So I'm assuming a 22p, it's not high premium, but I do really believe a company like Adobe deserves a premium. And my discount rate of 12%. I have a bull case in terms it gets better, a bear case. So with these assumptions, I came with an intrinsic value of $333. So right now, Adobe is trading at $394, 20% above my fair value, the price I'm interested to buy this company. Still not the price I would like to see, but it's difficult to buy Adobe at a cheap price or a really low P. Adobe has never been so low in terms of, if you look into forward P, for example, or price to free cash flow. But I really like Adobe. There are some risk reward situation. I do not think you will lose money. You'll probably, even though there are some competition, even though Adobe will not grow as fast as it used to grow in the last few years, yes, you can still make money, 5%. I do really believe you can make between 5 to 15% with this company, but I want the 12% gains per year. So Adobe, it's a little bit risky right now because of the price, even though they look very cheap. I will get interested if it drops a little bit more, maybe between $350 I start the position, but right now I will still be looking into that, and it is a company that looks very interesting. If you bought this company under $400, it looks like a really great buy, but maybe not for me right now. So after analyzing Adobe's business, its competitive advantage, and diving deep into its fundamentals and valuations, what's the verdict? Is Adobe a buy? We have seen that while the stock has taken a hit, the underlying business remains strong and the valuation is looking increasingly attractive. Remember, long-term investing requires patience and a deep understanding of the companies you invest in. What are your thoughts on Adobe? Do you think this is a good opportunity or are there still risks to consider? Let me know in the comments below. And if you found this analysis helpful, please hit that like button, subscribe and turn on notifications so you don't miss out on future deep dives into potential investment opportunities. Thanks for watching. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.